A very good evening to all the students. Welcome you to the fourth day on the crash course on GST organized by the Department of Commerce DG Vaishnav College and the Institute of Cost Accountants of India. So we have with us Shri Srivatsan sir from the nation who will be taking you through the place of supply, time of supply and valuation of supply. Over to you, sir.
Yes, thank you, Mr. Rakesh. Welcome to the students for the second day of this crash course on GST. Today, I will be covering the various important areas in GST, like valuation, time of supply, and as well as place of supply. Why these three chapters have been tagged together is precisely because they are stacked in that way in the legislation, chapter 12, chapter 13, chapter 14, and chapter 15, as far as the CGST Act is concerned. And that's precisely why we have clubbed all these aspects together. It also has one more ignominious distinction in the sense that these are going to be one of the most disputed subjects as far as these are going to be one of the most disputed subjects as far as GST is concerned, because it is going to cause a lot of imbalances or a lot of controversies, both from the taxpayers as well as from the tax administrators' point of view. So I will be talking about these three subjects today, but I will take valuation first and then go on to time of supply, and then finally about the place of supply. I will concentrate more on place of supply because this is one of the important concepts of GST. I can call it as USP of GST because, as I told you yesterday, we have shifted from origin-based taxation to destination-based taxation, right? What I will do today is that I hope you all remember on day one, I have left you with about 10 questions, right, as a recap. Maybe the first recap had 5 questions and then the second recap had another 5 questions. Let us revisit those recaps today now, and then probably I think you can give your answers in the chat box. If at least 1 or 2 people answer, I'll be very happy that my session was fruitful for all of you yesterday. I'll be doing this questions of recap 1 first, and probably I think you can put your answers in the chat box. First question is, which article of Constitution has given the name GST? You can put the answers in the chat box, please. Anybody is answering? Yeah, okay. The first question has been answered. That's right. No, it's not 369. It is Article 366, 12A. Right? So it's not Article 369. Second question is, what are the types of GST under, what are the types of GST taxes that has been prescribed under the GST law? What are the types of taxes that has been prescribed under GST law? So this is the question that I asked. See, the various types of taxes that has been prescribed under GST law is, yes, correct, CGST, SGST, IGST. Of course, one will have to add the compensation cess also. I do agree that it cannot be categorized along with CGST, SGST, and IGST, though it is not a tax, it is a cess, but still it is a liability, and therefore I think you have to answer that also. So the 4 components of GST taxes are CGST, SGST, and of course UTGST also you can add, because there are about 6 union territories in this country, so we have a specialized legislation for UTGST also. So UTGST also will have to be taken care. You are right. Along with that, please add compensation cess also. This is more a technical question which I asked you yesterday. What is the thumb rule to recognize supply? If somebody answers this question properly, I'll be really happy, because it gives the essence of understanding and recognizing the taxable event under GST. And therefore, if somebody answers this question properly, I think the session yesterday has been quite fruitful. That is what I will feel. Any answers on that? Are you able to understand the question properly, maybe? See, what is the rule of thumb to recognize supply? When will you consider something as supply? When will you consider an activity as supply? So that is the question that I asked you. What activity should happen so that it is termed as supply? That's right, supply of goods. I'm not asking about the taxable event, commercial trade. Okay. No, I specifically said that, yes, I specifically said, talked about two activities which distinguishes sale from supply. Maybe I think I have given you this exactly. I think Sairam has given one part of the answer, that is transferring the possession. But more importantly, it is the change in the right of ownership, which in fact is very important. So change in the right of ownership, change in the right of possession, both can happen together or they can happen independently also. So once both happens, either of them happens together or independently also, then supply is said to have been registered, recognized. Okay, so that is the thumb rule. Fourth question is, how many factors make a supply a taxable supply? Now that you know there is an event which is recognized as supply, when will supply become taxable supply? I was talking to you about 6 determinants which decides supply becoming a taxable supply. I've given you the one of the clues also, 6 determinants yesterday we were discussing. So when will supply become a taxable supply? That was the fourth question which I asked you yesterday. In fact, I'm very happy that people are responding properly. So in the sense that you have in fact taken these sessions quite seriously. So destination, goods, service, consideration, furtherance of business, exactly. Furtherance course of business, correct. I think 3 out of 6 is fair enough. And the other 3 are that it should be a taxable supply, it should be rendered by a taxable person, and also in the taxable territory, where I in fact also made a request to you to go through Article 1, 2, 3 of the Constitution to identify and know what is India, right? So the 6 determining factors which will make supply a taxable supply is that it should be goods or services, it should be for a consideration, it should be in the course or furtherance of business, it has to be provided by a taxable person in the taxable territory, and also that it should be a taxable supply. Is that clear? Okay. So what is the main factor which decides business activity? Say, I know you can easily comprehend what is a service, what is a, yes, fine. That he has nailed the answer perfectly. So intent to make profit. Though it cannot be generalized, but it can be comprehended in that way. So in that sense, I think any activity can be considered as an activity in the course or furtherance of business if somebody exhibits an intent to make profit. Whether he makes profit or not is a different question. If it has an intent to make profit, it is treated as a commercial activity or a business activity. Fine. I think all 5 questions have been properly answered, which means that I think my session yesterday was 50% a success. Let me go to the next 5 questions so that let us also understand whether you have understood the second part of the session. What are the 2 types of charges that has been prescribed under GST? So that was the first question that I asked yesterday. So what are the 2 types of charges, or who has been made liable to pay taxes? There are two different types of people who have been made to discharge the tax liability, or who have been, yes, forward charge and reverse charge. Forward charge is a normal mechanism and it happens in all general cases, whereas reverse charge mechanism, the liability to pay taxes, yes, the liability to pay taxes will be on the person who receives the goods, and in case there is any contravention in the legislative obligation, the recipient will be made liable to pay this tax, and he will have to invite the wrath of the legislation, the deterrent provisions. And perfectly, the section 9 is the right answer. Section 9 in fact has got 5 subsections. Section 1, 2 deals with forward charge mechanism. Section 3 and 4 specifically deals with reverse charge mechanism. And Section 5 deals with a situation where the reverse charge mechanism is on the aggregators like Ola or Make My Trip or Uber so Swiggy. So these people are aggregators. So 9.5 in fact specifically deals with reverse charge mechanism on these people. What the next question is, what is the turnover limit for compensation levy? If somebody wants to avail this, a small business entity who wants to avail the compensation levy scheme, what is the threshold limit beyond which he becomes ineligible, or till what turnover limit a person can avail the? Yes, the answer is 1.5 crore. In fact, when GST began, it was only 50 lakhs. It was subsequently enhanced to 75 lakhs, and then it was ultimately made 1.5 crore. As the law stands today, it is 1.5. Any person whose aggregate turnover crosses 1.5 crore, he becomes ineligible for compensation, availing compensation. Availing composition levy scheme. Fine. What goods compensation cess is imposed on, right? In fact, yesterday described about this compensation cess yesterday, why it was warranted, and I also told you that it is only for a transitional period of 5 years from 2017, which means that compensation cess will not be there after 30/6/2022, as the law stands as on today. So on what goods compensation cess is in fact imposed? Compensation cess in fact is imposed to compensate the states, predominantly manufacturing states, who apprehend the fact that there might be a loss of revenue because of implementation of GST. So the answer is sin goods as well as luxury goods, like sin goods like pan masala, tobacco products, cigarettes, etc., and also luxury goods like aerated water and also automobile industry. So these are all goods which attracts compensation cess. Let me be very clear on one fact, that compensation cess is now imposed only on those goods which attracts the highest rate of tax of 20%, right? So there is no compensation cess for goods and services which attracts lesser than 28%. So it is only on those commodities when made supply which attracts highest rate of tax of 28%, and that too they should be sin goods as well as luxury goods, right? Fine, the answer is right. What are the services that are totally exempted from GST? So that was the 9th question that we discussed yesterday. The service is totally exempted from GST. We have a little bit of understanding about difference between a non-taxable supply and a supply. Exempted is still a taxable. There is no liability to pay tax, whereas there are certain commodities like petroleum products as well as alcoholic liquor for human consumption, which are at present kept out of the liability. Yes, exemption: educational services, health, medical services, electricity, as well as agricultural services. I think again Sairam has given 3 right answers: education, agriculture, medical, also electricity. Supplies relating to electricity are also outside the ambit of GST levy as on date, right? Okay. What is the turnover limit for taking registration for supply of goods? So that was the last question. So with this, by answering this, I think we will go to today's session. What is the total threshold limit beyond which a person who is supplying goods will have to take a registration? 40 lakhs, exactly correct. 40 lakhs is the right answer. No, 50 lakhs is not the right answer. It is as on date, it is 40 lakhs. 50 lakhs, I made a reference yesterday, 50 lakhs with reference to composition levy scheme. If a person who is providing a supply of service up to an extent of 50 lakhs, he becomes eligible for compensation levy, composition scheme, even if he is a provider of service. So that 50 lakhs, you should not get confused here. If a person is a pure supplier of goods and his turnover has exceeded 40 lakhs, then he will have to take registration. If he is well within 40 lakhs and he is supplying only goods, he need not take a registration, right? So fine, I think most of the answers, in fact, all the answers have been properly answered, and I'm very happy about that. And there is one question: 10 lakhs for specific categories, sir. Yes, that is right. That is for special category of states where the that is also right. So but But generally, let us speak about the normal taxpayers apart from the special category of states. So the answer to that question is 40 lakhs is the normal threshold limit beyond which a pure supplier of goods will have to take a registration. Fine. So now today we will go to today's topic. I will make the presentation now. Yes, is the presentation visible? If somebody confirms it, I will proceed.
Yes, sir, it's visible, sir.
Right, thank you very much. So let us start with this value of supply. I hope you remember this slide as I showed you when we were speaking about the liability to pay tax and also the levy when the levy is there. In fact, as somebody rightly pointed out, which levy to pay tax is Section 9 of the CGST Act, IGST Act, SGST Act, and Section 5 of the IGST Act. So what does it say? It says that I'm just trying to give you the essential ingredients of the charging section, right? Which imposes the charging section. I have in fact broken down the essential ingredients of the charging section. If it is an interstate transaction, IGST is levied. If it is an intrastate transaction, SGST or UTGST, as case may be, will be levied. GST will be levied in all transactions. SGST and UTGST will be levied if the place from which is a state or an union territory. So there shall be a levied tax called CGST or IGST on all intrastate, interstate supplies of goods and services except on supplies of liquor on the value determined. This is very important. So that is precisely why I in fact wanted to have a look back about the charging section. It specifically says that on the value determined, which means that you cannot but levy taxes only on ad valorem basis. I hope all of you will understand what is the meaning of ad valorem based levy. Ad valorem based levy is nothing but a tax will be imposed as a percentage of the value of transaction. So that is what ad valorem based levy is all about. And because the charging section says that it shall be on the value determined, we have no other option but to impose tax only on ad valorem basis. And that's precisely why value assumes the greatest importance when you are going to assess the liability of taxes. What are the two very important criteria which will decide the quantum of tax to be paid? See, you know that whatever is being affected is a supply, and whatever supply is there has become a taxable supply, which means that you are liable to pay taxes. But how much tax will have to be paid? So that will be determined by Section 9. And how much taxes shall be paid? It shall be on the rates prescribed. The first one says that on the value determined, and on that particular value at such rate which is not more than 20 or 40%, which means that the government has got an elbow room to impose CGST up to an extent of 20% or IGST up to an extent of 40%. But as on date, the government has restricted to keep the apex rate at 14% of CGST or 28% of IGST, right? Because you know that IGST is nothing but a sum total of CGST plus SGST or UTGST. So the maximum apex rate that has been kept now is only 28%, 14 plus 14 or 28%. So on what value this 14 plus 14 or 28% will be applicable? That is what we are going to see today. That will determine the value of supply. Okay, now I hope you have understood the importance of value as far as GST is concerned. Let me also tell you that historically we have been imposing taxes on ad valorem basis for quite some time, right from 1965. In central excise, we have been imposing central excise duties on ad valorem basis, and in service tax right from day one, that is from 1st of July 1994, this ad valorem based levy has been introduced. So ever since this ad valorem based taxation regime was introduced, it has the ignominious distinction of being one of the most disputed subject. It invited a lot of litigations precisely because the tax administrator will always try to keep the value as maximum as possible so that the revenue is more. And in fact, the taxpayer will try to keep it as less as possible so that the liability becomes less. And that's precisely why I have given this GIF here, where two people are pulling the thread towards their side, right? So the idea is that the tax administrator always wants to keep the value at the highest point, while the taxpayer wants to keep it at the lowest point. So it has a tremendous implication on that tax liability, and that's precisely why I told you that value, it can never be solved, in the sense that this battle is a continuous battle. The litigation can be reduced, but it cannot be brought down to zero, because it is always a constant effort from both the parties to dispute it, to ensure that they are benefited to the maximum. So, but the GST law, taking into cognizance all the historical disputes, in fact, try to make this concept of value as simple as possible, so that the disputes come down. It cannot be made zero, but still it comes down. So every effort has been taken to ensure that the concept of value is understood properly. We have one section which deals with this concept of value, that is section 15 of the CGST Act. And also, in case there are situations where you are unable to determine the value in terms of section 15, we have been given a set of rules which will help us to arrive at the value as seen by the legislation. So rule number 27 to 32 will speak about the valuation rules, and this will help us to understand how the value will have to be arrived, upon which the rate of tax will be applied to arrive at the liability, right? Okay. So value, let me again, for the sake of simple understanding, I have put the essential ingredients of the definition of value. Value of supply of goods or services shall be transaction value. So whenever a transaction happens, whenever a supply happens, it is treated as a transaction, and the consideration received for this transaction is generally treated as transaction value. How it has been defined under the legislation, you will have to see that the transaction value is the price actually paid or payable. So you go and buy a product in the market. Again, we will take the example of that toothpaste. What you do, you go to the market, buy this toothpaste, pay him 50 rupees and get the goods into your hands. So what is the price actually paid? It is 50 rupees, and therefore the transaction value is 50 rupees. But it also says that price actually paid or payable. There are certain situations, in fact, in business transactions, the amount will not be paid immediately. It will be paid after maybe 60 days or 90 days according to the contract. So it does not mean that I will be liable to pay GST only on receipt of that payment. So we cannot constitute like that, because you have to understand that GST is a tax which is imposed on, not on payment basis, but on accrual basis. So that is why the words paid or payable is present here. So even according to the agreement or contract, if there is a liability to pay a particular consideration, it becomes transaction value. So it is the price actually paid or payable for the said supply of goods and services. So this is the first and fundamental understanding that you should have before proceeding further. This is the first condition. It is the price actually paid or that becomes payable on account of supply of goods and services. And second very important condition is that the supplier and the recipient of supply should not be a related person. Related here, you should not take the colloquial meaning of related, like a father and a son, or a father and an uncle, or something like that. It is not, the term here related does not mean in a colloquial manner, though it is also attributable to that meaning. The term related actually should be understood in the sense that if one person has business interest, see, for instance, if I have a business interest, I have some investment in, I am a supplier, I am making, let me assume that there is a company A which is affecting a supply to company B, and A is having some stake in company B, and they are in fact deciding, or they are also influencing the decisions of the management of company B. They become related person. You can also treat them as an associate enterprises. So if one company has got some business interest in another company, they are treated as related person. And whenever transaction happens between two related person, the price actually paid or payable need not be the transaction value. So in that situation, we will have to take resort to the valuation rules. I will be explaining that a little later. And the third one is the price should be the sole consideration for supply. What does this mean? See, there are certain situations. I will give you one example here, so that might probably help you, right? See, price is the sole consideration for sale. What happens here? Let us assume that you are trying to buy a Samsung mobile phone. So it says that the cost of the Samsung mobile phone is 41,500 rupees, and there is an instant cashback when you are going to exchange your old mobile phone. They say that they will be giving you 7,000 rupees as instant cashback, and the effective price is 34,000. Okay, so now you will have to let me know on what transaction value, what is the transaction value on which this tax is liable to be paid. Is it 41,500 or 34,500? So this will have to be understood clearly, because the amount that you pay is only 34,500, whereas the cost of the product is 41,500. Okay, so this is exactly what I mean by price is not the sole consideration for sale. Okay, here the bill raised by the supplier will be only 34,500, but what is the value? It is 41,500. So GST will have to be calculated on a transaction value of 41,500, whereas the amount that you pay to him will be 34,500 plus GST on 41,500. I hope you have understood this concept clearly. If there is any apprehension, please put it in the chat box. Are you able to understand this? Price is the sole consideration for sale. If there are any additional considerations like the 7,000 rupees, which he is giving you as a discount, it cannot be treated as a discount. It is a consideration which you give him, you exchange him, so that the quantum of outflow from you, the purchaser, becomes less. So can you once again explain the second condition, that is related person? Yes, I will do that, please. Yes. See, I hope you are clear with the additional consideration that is being received. So price is not the sole consideration, right? So now I will try to explain to you what is meant by related persons. See, you will have to understand that if I have some business interest, like let me have that I am a company A, and there is one more company B to which I am making a supply, right? So A has invested some amount in company B, which means that I will have some interest in the activities of company B. I hope you know what is the definition of an associate enterprise. Associate enterprise is the best example for related person. Associate enterprise or sister companies, something like that, subsidiary companies. So all those things it will have a lot of say in the decision making process of company B. If that happens, these two companies are considered as related companies, and whenever the transaction happens between the related companies, the price may not be, because I will always try to undervalue the cost of the to my related company. See, when I am selling maybe this a particular product at 50,000 rupees for others in the wholesale market, to a company which is a related company for me, probably I will sell it for 40,000 rupees also, because I have any, and obviously I will be selling it at a lower price. So if there is an established fact that the transaction between two companies or on related company basis, see, the essence is like I will tell you the punchline will be mutuality of interest with each other, right? So if I have a mutual interest in the growth and development of the other company in which I have also invested, I have the responsibility, or I have the role to play as far as the decision making process in that company. These two companies become related company. The related company concept, in fact, has been defined under GST law also, and it is exactly the replication of the understanding under the Income Tax Act as well as in the Companies Law. So for your understanding, what I would like to suggest is for you to have a grip or a comprehension as to what is this related person concept. Try to understand the definition of associate enterprise, right? From that on, you can in fact develop. So just go, you can in fact, if you want, I can give you the definition also. What is the definition of an associate enterprise? Probably the definition will help you to understand that. Probably you can have this as a basis for understanding, right? So this is not the exact meaning of related person. Is one example which will help you to understand what is the concept of related person. They should participate either directly or indirectly through or one or more intermediaries in the management or control or capital of the other enterprise. If that happens, they become related person. Is the concept now clear? Right. Fine. That's fine. Okay. Okay, so now we know that transaction value is the price paid or payable. And what are all the components that we should include? See, this is very important. Any taxes, duties, fees, or charges that is levied under any statute other than CGST, SGST, IGST, UTGST, or compensation cess will have to form part of the transaction value. See, let me give you a very good example here. You are importing goods, right? And you let us assume that you are importing an Apple mobile phone, right? So at the time of import, let us assume that this phone costs you 1 lakh rupees, on which there is a basic customs duty of 10%. Let us assume it is not 10%, it is only for illustration. So it is 10% of 1 lakh rupees, which means that the cost now is 1 lakh rupees, the value of mobile phone, plus 10,000 rupees is the basic customs duty. You know that the import of goods is treated as deemed interstate transaction, which means that there will be an IGST levy from the GST legislation. Let us again assume that the IGST on mobile phones is 10%. For the sake of calculation, I'm very bad in mathematics, so for the purpose of easy calculation, again I'm imposing 10% on 10% IGST on mobile phones, right? It is actually 12%. So let us assume that 1 lakh rupees is the value of the goods, 10% of which is the basic customs duty. Now it becomes 1 lakh plus 10,000, 1 lakh 10,000. On what value you will impose IGST of 10%? Generally, it is assumed that it shall be on 1 lakh rupees. But you will have to understand the fact that basic customs duty is not a tax or a duty or a fee that is levied in terms of the GST legislation, and therefore for the purpose of levying IGST, the transaction value shall be 1 lakh rupees plus 10,000 of basic customs duty, which is 1 lakh 10,000 rupees. And on 1 lakh 10,000 rupees, you impose an IGST of 10%. Therefore, IGST payable becomes 11,000 rupees and not 10,000 rupees. So now the amount that is payable in the transaction is 1 lakh rupees. The transaction value, I mean 1 lakh rupees is the value of the product, plus 10,000 rupees, which is the customs duty, 1 lakh 10,000 rupees, plus 11,000 rupees IGST on 1 lakh 10,000 rupees, which means it is 1 lakh 21,000 rupees will be the bill amount. I hope you have understood this concept here. Does this require any more explanation? You can put me in the chat box. Okay, so this is how it has to be calculated, the value of transaction. See, there are some situations where the providing service, like for when somebody is providing a security service, there is an income tax TDS that is deducted. So there were always a dispute whether income tax TDS also the transaction value. Whatever is the tax that is imposed over and beyond the GST legislation will have to be included as part of the transaction value. So this is what this first condition actually says. Second condition is that all incidental expenses such as commission, packing, repacking, transportation, loading, unloading, charged by the supplier to the recipient of supply, whatever amount is charged and is realized paid or payable by the recipient will have to form part of the transaction value. So the transaction value shall now include the cost of the product as well as all the taxes that come along with that over and above the GST legislation, and also all the incidental expenses like packing, unpacking, loading, unloading, transportation, or any other charges that is charged to the recipient. The third point is any royalty fees that is paid for using a brand name, or any IPR amounts that is being transferred, any license fee that is paid, and that is in relation to the supply of goods or services, that also should form part of the transaction value, right? Third is that for this, any discount or incentive can be allowed. So I will talk about this discount a little later. Or any reimbursable expenditure or cost incurred on behalf of the supplier and charged in relation to supply. Again, I will try to explain this with an example. Let me assume that I am a manufacturer of car, and I am supplying my cars through a dealer, authorized dealer. So what I will do is, let me assume that I am selling one car, and I am asking the dealer to issue advertisement for that car, and whatever is the expenditure incurred towards advertisement of that car, I will reimburse him that amount. So that is the contractual obligation, so that my car is actually sold in a better way. So what I do is, I enter into a contract with my authorized dealer. I supply him cars. Let us assume the value of the car is 10 lakh rupees. Okay. So I supply him the car for 10 lakh rupees, and also instruct him with the contract that he has to incur the advertisemental expenditure for pushing that car in the market. Okay. And whatever is the incidental expenditure incurred for advertisement as an original car manufacturer, I will reimburse to him. Though it is incurred in the hands of the recipient, I will be reimbursing it to him. Okay. So this is the understanding between me and the authorized dealer. Whatever is the expenditure incurred by him on behalf of me for advertisement will also form part of the transaction value. So this is precisely what any reimbursable expenditure or cost incurred or by or on behalf of the supplier. So this also should form part of the transaction value. He cannot say that because the expenditure has been incurred by the dealer and not by the supplier per se directly, it should not form part of the transaction value. It shall form part of the transaction value, right? Coming to the aspect of discount, discounts are in fact recognized as a deduction in every accounting standard. So GST also recognizes it properly, and any discount that is allowed prior to making supply, right? Those discounts are in fact permitted. So any discount that is an afterthought, once supply is effected and the transaction is over, after that if somebody wants to give a discount, that discount cannot be deducted from the transaction value. It has to be added to the transaction value. This is very, very important, because this is one point where there could be a lot of disputes as far as GST is concerned, and a lot of clients probably might approach you to have a redressal for this. The concept here is very clear. See, you have to decide whether you are going to give as a supplier, whether you have to decide whether you are going to give a discount or not. Okay. If you decide that you are going to give him a 5% discount or 10% discount or 20% discount before the supply is effected, then that discount is a permissible deduction from the transaction value. But if you decide that you effect the supply first, and after that you enter into a negotiation, and as an afterthought you're going to give him an extended discount and offer him a credit note, then that value of discount cannot be deducted from the transaction value, right? I will now explain this with an example. Again, I am supplying a particular commodity or goods for 1 lakh rupees, right, from A to B. Right, A and B are not related person, and price is the sole consideration for sale. So the transaction value generally is 1 lakh rupees. But I have already entered into a contract with my consumer saying that I will be extending him a discount of 10%. So before supply is effected, I say that the value of the product is 1 lakh rupees, whereas as per our contract, I am allowing you a discount of 10%. So 90,000 rupees is the cost of supply, and GST is payable only on 90,000 rupees, not on 1 lakh rupees. So this is very clear. The deduction is permissible deduction. It can be deducted, and after deducting that discount, GST liability can be arrived at. Okay. Now the second situation is that I am again supplying this 1 lakh rupees. I have supplied it. He has also received the goods. Right. After receiving the goods, probably he engages into a conversation with me and requests for a discount of 10%. And if and only if I extend a discount of 10%, he will be continuing business with me. After a protracted conversation or after a protracted discussion with him, I agree to extend him that 10% discount. Now the supply is already over. I agree to extend this discount to him after the supply is over. And in order to account it properly, what I will do, I will raise a credit note for him so that the 10,000 rupees is deducted. So the liability is that he will be paying me only 90,000 rupees as cost of supply. But here, since the discount is an afterthought after the supply has been effected, it cannot be allowed as a permissible deduction. The transaction value shall still remain as 1 lakh rupees, whereas the amount that the supplier will pay to him will be 90,000 rupees as cost of supply. So this, because this discount is offered after the supply is effected. Okay, there are certain situations where this discount, we don't know what is the percentage of discount. Like, there are some situations where I am engaging continuously with a business transaction with customers, and I have entered into a contractual obligation with him saying that if you in fact exceed a turnover of 10 lakh rupees with me in a financial year, your rate of discount is 10%. Whereas if you do a transaction of 20 lakh rupees, your discount will be 15%. If this is the condition, in that situation, at the time of supply, I don't know what is the quantum of transaction, of quantum of discount that I should give him. Because at the end of the year, if he has done 20 lakh rupees, he is eligible for 15%. Or if he has done only 10 lakh rupees, he is eligible for 10%. If he has done less than 10 lakh rupees, he may not be eligible for any discount. But the underlying fact is that at the time of supply, I know that I have to extend some quantum of discount to him. But the problem is that I don't know how much discount I should give him. Okay, in such situations, discount becomes a permissible deduction, even though it is not known at the time of supply. It is only the quantum which is not known, but the concept is already known. Such deductions are also permissible. So discounts, we have three components: one that is known prior to supply, one that is known which is allowed as deduction, one which is known only after the supply is completed, which is not a permissible deduction. The third one is a little complex. I know the concept that the discount has to be extended to him based on my contractual obligation, but I don't know how much discount I will have to allow him. So once he crosses this 10 lakh rupees, I will be extending this discount to me by way of a credit note. Such discounts are permissible deductions. And if I had paid, see, for instance, at the time of supply, I am charging him 1 lakh rupees. I have not given him 10,000 rupees, 10% discount. But once he crosses this 10 lakh rupees, this 10,000 rupees will have to be given to him. So at that time, I will be extending him with a discount of 10,000 rupees by way of a credit note. That amount is permitted to be deducted. And if at all I have paid excess tax, that tax is refundable, provided the recipient has not taken input tax credit. So this is the entire concept of discount. So is this concept clear? Can I go further? Because little bit complex. Okay, the question is, he has to pay GST for 1 lakh, sir, after supply? Yes, this is exactly what I in fact, explained the three situations here. When the amount of discount is known or prior to supply, 1 lakh rupees is the cost of supply. I extend him 10% discount before the supply is effected. In that situation, the tax will have to be paid only on 90,000 rupees, not on 1 lakh rupees, because the discount is already known. I extend him at the time of supply. I can deduct this 10,000 and pay tax only on 90,000. But if I had already supplied, then the transaction value shall still remain as 1 lakh. But I can offer him a discount only to the extent of 10,000 rupees on the value, but GST liability will hold water, so it cannot be changed. Is this clear now? Right, fine. Okay, so we will now go to the. We know that what are all the value that is include. What are all the points that are includable in the transaction value. Now let me see what are all the values which are not, which should not form part of the transaction value. So this is just a diagram to show you that the value of supply shall include price, taxes, duties, except IGST, CGST, SGST or compensation cess, all incidental expenses, royalties, license fees, subsidies received from the government, or any other amount that is incurred by the recipient on behalf of the supplier. All these shall form part of the transaction value. And value shall not include the trade discounts that are allowed before or at the time of supply, or discounts which are given as per the agreement and is known at the time or before the time of supply. So this is exactly what I said. There has to be a contractual recognition that a quantum of discount shall be extended even though you don't know how much discount you are going to allow. Okay, so this is a broad snapshot of what this transaction value is all about. And when you are not able to arrive at the transaction value on the basis of these guidelines, when this will happen? This will happen in a situation where the transaction is between related persons, or when the price is not the sole consideration for sale. So in these two situations, you will not be in a position to arrive at the transaction value. In such situations, you will have to take resort to the valuation rules from 27, rule number 27 of the CGST rules to rule number 32 of the CGST rules. Broadly, these rules gives us three guidelines how to compute the value. One is determination of value by comparison method. See, when I am engaging my transaction with a related person, as I told you, it is generally 1 lakh rupees, and specifically for him, I am extending it at 80,000 rupees. Obviously, because of the fact that he is a related person to me, I have to charge him less. Is it not? So in that situation, you have to see if it is not for that particular related person, if the same or similar commodity is supplied to somebody else in the open market, what price I have adopted for him, that price will be the transaction value if the transaction is between two related persons. Okay, see, the same example I will take. The same goods I am supplying to B, who is not a related person. I am charging him 1 lakh rupees. The same goods I am supplying to C, who is an associate enterprise for me, and I am charging 80,000 rupees. Right. So the transaction value there is 1 lakh rupees. Here the value is 80,000 rupees, whereas because he is a related person, I have to adopt the comparable price. The comparable price is 1 lakh rupees. So the GST shall be payable on 1 lakh rupees, and the bill amount will be 80,000 rupees plus GST on 1 lakh rupees. So that is comparison method. If there is no such transaction, see, I'm making only supplies to this fellow who is a related person, and there is no scope for me to have a comparable product with a third party transaction where we are not related person. In such situations, we have to do the cost construction method. We have so many accounting standards, cost accounting standards. Generally, this CAS4 method is in fact followed. So this accounting standard is generally followed. It is cost of production plus an amount towards profit and general expenses. So you have to make a calculation, arrive at the cost construction, which is called a computation method, and then arrive at the transaction value. Third method, if it is not possible by comparison method or computation method, then you will have to resort to a residual method where reasonable means of consistent principles in line with the general provisions of valuation rules will have to be followed on the best judgment method. So it is the discretion of the tax officer who will decide what should be the transaction value. So you will have to first adopt comparison method. If it is not possible, then go to step 2, computation method. If that is also not possible, go to the residual method. So these are the various situations which will help you to arrive at the transaction value, right? So just to wrap up what this valuation is all about, it shall be the consideration, which will be the transaction value. And when we speak about consideration, we should also remember that consideration in all times need not be in cash. Cash includes not only payment by currency, it includes payment by negotiable instruments, payment by bank transactions, or payment by any other means, right? So cash does not specifically mean by currency. So if it is if the whole consideration is paid by cash, then the entire consideration will be transaction value. But if the buyer pays by non-cash payment, like see, for instance, yesterday also I gave one example. I am a chartered accountant and I am providing a service to my client, and instead of taking 1 lakh rupees as my consultancy charges, I take from him 5 grams of gold, or 2 sovereigns of gold, or 3 sovereigns of gold. So in that situation, the consideration is a non-monetary consideration, but it is capable of being expressed in terms of money value. And therefore, in such situations, we will have to resort to valuation rules. So the valuation will be on comparison basis, computation method, or residual method. So 27 to 32. So this will help us to understand how the value will have to be arrived. So that these valuation rules will become very handy when the transaction, the consideration is a non-monetary consideration, whereas when the consideration is cash or directly monetary consideration, then probably I think you can straight away take that as whatever is the amount paid or payable will be the transaction value. There are certain situations where the buyer will give in cash as well as a non-cash payment. Like say, for instance, if the transaction is 1 lakh rupees, what I will do is I will say that I will be paying you 40,000 rupees as cash and 60,000 rupees as 2 sovereigns of gold. In that situation, it shall be 40,000 rupees, which is received as cash, or it can also be like I will also be providing him a service. Okay, see, I am a chartered accountant. I have a client for whom I charge 1 lakh rupees as my consultancy charges, and my client is an interior decorator. Okay, what I do with him is that okay, there is a liability from him to pay me 1 lakh rupees. What I will ask him is I will ask him to do some interior decoration to my house, for which he says that he will be charging 40,000 rupees. Okay, so what I will do is I will not receive 1 lakh rupees from him and then pay him 40,000 rupees. I will net it and say that I will be paying 60,000 rupees. In that situation, what has to be done is that the supplier of service, that is the interior decorator, will have to pay me 1 lakh rupees, on which GST will have to be paid. But I will be paying him only 40,000, 60,000 rupees, because I owe him 40,000 rupees for the services received from him as an interior decorator. Okay, so I will be netting this. In that situation, we cannot pay GST on 60,000 rupees, but it has to be 60,000 rupees plus that 40,000 rupees, whatever he says. Is a non-monetary consideration, but capable of expressing in terms of money value. That also will have to be included for the purpose of payment of GST. Again, this might look a little bit confusing for you. Please tell me whether you have understood this concept. If you have not understood, I will explain it further. But if you have understood this, probably we can go to the next session, next part. Okay. Right. And what is the situation in case goods are imported? We have already seen it. The value of value on which IGST is payable is the customs value on which the customs duty is paid plus import customs duty together will form the transaction value. In case of imported service where we don't have customs liabilities, it is the total consideration that is given. When the items are sold, then are you able to see my presentation? Okay. When the items are sold, then the original value minus discount, which is known at the time of supply. So this is essentially about the concept of valuation. Let me tell you, friends, that it might look a little bit confusing now. I have tried to make it as simple as possible with some illustrations and examples, but don't worry about that. As I said, valuation again has been one of the most disputed subject, because there is a constant effort both by the tax administrator as well as the taxpayer to keep it to their advantage, and therefore it is in fact a landmine of litigation. So don't worry about the fact that valuation is little complex. It has always remained so, but the general understanding what you should have is that The transaction value is the price that is paid or payable for any transaction. So that is, and it includes all taxes other than GST, all incidental expenses, and it shall not add the, deduct the discounts if it is not known at the time of supply. It has to be between two unrelated parties, and price should be the sole consideration for sale. No other consideration like exchange offer or something like that shall be there. So if all these criteria are satisfied, then that particular value becomes the transaction value, right? So is this concept okay? So there is a question about explain about non-cash payment. Sir, could you repeat the partial non-cash payment? Okay, I will take the same example. I know it might be a little confusing, and I'm very happy that you people are in fact asking me this question, because I will be going to the next topic with the misconception that you have understood it clearly. Anyway, now let me be very, very clear with this example. See, I am a chartered accountant. I am providing a supply of service. The supply of service is to my client B, okay, who is an interior decorator. Okay, so for whatever service I provide for finalizing his balance sheet, I am providing a chartered accountancy service to him, or a cost accountant service to him. So for which I charge him 1 lakh rupees. Okay, so 1 lakh rupees is the amount that the interior decorator is liable to pay me for the supply of services that I made to him. And let us assume that it is 10% GST is payable on that. Okay, so how much will be my bill to him? 1 lakh rupees plus 10% GST. 1 lakh 10,000 rupees is the bill that I will raise to him. He will be paying me 1 lakh 10,000 rupees. 10,000 rupees I will deposit to the government. 1 lakh I will keep it as my consultation charges. So this is essentially a normal transaction, right? What happens here is that being an interior decorator, I request him for his services to me. I want him to do an interior decoration for my house. Okay, so what he does, he will say that it will cost you 50,000 rupees, or let us assume it will cost me 40,000 rupees. So he completes this interior decoration work for me and raises a bill to me for 40,000 rupees. Again, let us assume it is 10% as GST. So he will raise a bill for 40,000 rupees plus 10% on 40,000, 4,000. So 44,000 rupees he will raise a bill to me. Okay, so what I will do, see, I already owe him 1 lakh 10,000 rupees. He owes me 1 lakh 10,000 rupees, and as a chartered accountant, I owe him 44,000 rupees. What I will do, I will pay him 74,000 rupees. So this is the entire transaction. But how will the bill look like? It cannot be for 70,000 rupees, or it cannot be for 60,000 rupees. That is the balance which I have to pay him. Clear? So because he owes me 1 lakh rupees, I owe him 40,000 rupees. So net, I have to pay him 60,000 rupees. I cannot pay 60,000 rupees into 10%, 6,000 rupees as tax. It has to be, he has to raise a bill for 1 lakh rupees, and then he can deduct this 40,000 rupees which I owe him. So 1 lakh minus 40,000 rupees is 60,000 rupees, but the calculation of GST shall be on 1 lakh rupees, right? So 10,000 rupees I have to pay him. He will take it as credit. He will use it for discharging when he is raising an invoice of 40,000 rupees towards me. So this is how it is not working on netting. It has to be on purely transaction basis, right? So this is what I said when I receive partially as non-cash. What is a non-monetary consideration that I am receiving from him? Supply of interior decoration services. So whatever is the amount attributable to that shall also form part of the transaction value. So the value shall not be 60 minus 40. It shall remain as 1 lakh rupees, on which GST will have to be calculated, and then subsequently probably you can reduce in the invoice 40,000 rupees and then go ahead. It is from my end, but he also has a liability to pay tax on 40,000 rupees, so it is from his end. Therefore, this is how the transaction value when consideration is non-monetary is received, and this is how the calculation will have to be made. Yes, that is right. See, it cannot be like the liability on the decorator is 66,000 rupees. Indirectly it might be right, but the transactions are two independent transactions. Okay, the problem is similar to the example which I gave, exchange of mobile phones, like 42,000 rupees, where he offers an exchange for 7,000 rupees and he bills me only 35,000 rupees, and he cannot charge GST on 35,000 rupees. Okay, so it has to be on the entire value on which GST is payable. So what happens here is, though there is an internal adjustment in the sense that I will be paying him only 60,000 rupees, whereas there will be two bills here. One is the bill that I raise him for 1 lakh rupees, on which he has to pay 10,000 rupees as GST. So I will have to transfer him 1 lakh 10,000 rupees, and he will be raising a bill to me for 40,000 rupees plus 4,000 rupees GST. So both are independent transactions. Okay, and whatever is the GST that he pays for me, which I will ultimately deposit to the government, that is 10,000 rupees, he can take it as ITC, and whatever is his liability on 40,000 rupees, that is 4,000 rupees, he can adjust from the 10,000 rupees that I have paid to him as GST, right? So this is how the transaction will be. This is how the supply chain will be. The point which I want to drive here is that GST cannot be paid after netting. It has to be on simply transaction basis, the price that is payable or the price that is paid. Is that clear now? Okay, so I will take it as that it is clear, and let me go to the next topic. Okay. Right. I will go to time of supply. Okay, can any one of you tell me what is the importance of time of supply? Why time of supply is in fact required for GST? Yes, I think I have some answer from Shashwat. The decorator pays 10,000 GST and the CA pays 4,000 GST. Yes, that is right. What happens is that the decorator pays 10,000 rupees GST, which he can take as ITC. And while discharging his 4,000 rupees, he can adjust this 4,000 rupees from that 10,000 rupees. Perfect. Okay. So I think you have all, the answer is perfect. So this is exactly where the cascading effect of tax on taxes has been utilized by having this ITC, which is fungible across all transactions, across all states. So the value in fact comes down. The cost of supply comes down, right? So I'm happy that you people have understood this concept clearly. If still, if when the time is known, okay, she's jumping next topic. So even a few people who have not understood this concept can in fact put this question in the chat box. Probably I will allot about 10 to 15 minutes towards the end, so that I will air out all the difficulties and apprehensions that you have, not only with the topics that I have spoken so far, but any of the general topics, not only as students, but also as consumers who are in fact bearing the incidence of tax. So we will have a small discussion time between 5:15 to 5:30. I will air out all your problems. Even 5:30 to 5:45 is okay for me, if it is okay for you. Okay, right. So we'll jump to the next topic. When the time is known, the buyer can be prepared to pay the amount to the seller. That is right. In the sense that, you know, that yesterday when we were seeing about the meaning and scope of supply, we saw that there is a word which says that agreed provided or agreed to be provided. Okay, so essentially it is not the incidence of the taxable event which will trigger the liability. It will also will be the point at which it is agreed to be provided. So that is precisely why the time of supply actually comes into play. For instance, if I enter into a contract with somebody to supply goods on 15th of April, okay, so I will be supplying good on, I have entered into a contract on 1st of April. Okay, so on 15th of April, I will have to supply goods to him. So generally, earlier, see, for instance, under the excise duty provisions or the sales tax provisions, the taxable event has to happen for the liability to be created. Whereas under service tax as well as under GST, the taxable event need not happen. But if there is an agreement to provide or supply that service or goods, then that becomes the point where the taxable event is deemed to have been occurred, and that will be the point at which the liability will have to be discharged. See, for instance, if you receive an advance, see the same example, I have entered into a contract for supplying about 10,000 pens, writing instruments, 10,000 pens to a particular person. So according to the agreement, I will have to supply this 10,000 pens on 15th of April. I have entered into an agreement on, let us assume, on 1st of April. And one more condition is that for supplying these 10,000 pens, he has to provide me with an advance. Okay, so let us assume that I have received an advance of 5,000 rupees towards the supply. Okay, so these are three instances. So here, even though I have entered into a contract on 1st of April, the agreement is fructified only if two things happen. One is either I should receive an advance so that I am obliged to make the supply, or I should raise a bill so that he is also obliged to pay me. So if and only if there is a payment of advance or issuance of an invoice, there is a mutual obligation that is triggered on account of the contractual obligation. So if that is the point where the agreement is recognized, and that point becomes the time of supply even before the actual event of supply happens. I'll explain this. See, these provisions are there in section 12, section 13, and section 14 of the CGST Act. So this slide, in fact, shows you the authority and also the instances which recognizes the time of supply both for goods as well as for services. It is either the date of removal of goods or provision of service, or date of issuance of invoice, or date on which an advance payment is received, or in case of reverse charge mechanism, date of recording it in the books of accounts. So if any of these, out of these four instances, whichever happens the earliest will be the time of supply. So at that particular point, the liability is created, and one will have to discharge the GST upon creation of that liability, even if it is prior to the actual supply. So this slide probably will make you understand it very clear. Generally, the basic tax point is the point at which the taxable event actually occurs. Like for an excise duty, if manufacturing happens, or if as per the Sales Tax Act, if sale happens, that is the point at which the liability is actually created, right? But here, because of the presence of the word agreed to be provided, the basic tax point is shifted, and the actual tax point can be either the date of invoice or the date of receipt of payment. If these things precede the taxable event, that becomes the actual tax point. If all these things are concurrent, then basic tax point and actual tax point are merged and they are at the same time. So that is precisely why time of supply becomes important. See, I will also give one more example here. I have entered into an agreement for supply of goods on 1st of April. Okay, goods worth 10 lakh rupees. I have decided that I will be supplying him a machinery worth 10 lakh rupees. I have entered into a contractual obligation with him. Okay, and after the contract is made on 1st of April, I have received an advance amount, or I have issued a bill. Let us not confuse here, because there is one more point which, okay, I have received an advance amount of 1 lakh rupees from my customer. 1 lakh rupees I have received. I have to supply machinery worth 10 lakh rupees. Okay, what happens is, in fact, I have to manufacture that machinery. So I complete the manufacturing process and then supply him the machinery only on 10th of May. Okay, so 10th of May, I am supplying according to the contract. So the contractual obligation is over. So what happens is, he has already given me 1 lakh rupees on 10th of April. I have supplied the machinery on 10th of May, the next month. So you know that the GST liability shall be discharged for a particular month on 10th of the subsequent month. So here, the time of supply shall be the date on which I have received the advance, that is 10th of April. For this 1 lakh rupees, I will have to discharge my tax liability by 20th of May. Actually, I have supplied the machinery only on 10th of May. That is the actual taxable event. That is the basic tax point. Whereas because I have received an advance, the actual tax point becomes 10th of April, not 10th of May. So whatever is the balance amount out of 10 lakh rupees, for 1 lakh rupees, I have to pay it on 20th of May. And for the balance 9 lakh rupees, after the machinery has been supplied on 10th of May, I will have to discharge my GST liability on 20th of June for the balance 9 lakh rupees. So this is essentially the importance of time of supply, because as I told you, it is because of the presence of the word agreed to make a supply, right? Is this clear? This is a concept that one will have to understand here. Okay, time of supply must be known for compliance of rule of law. Exactly, perfect. I think this will decide at what point one will have to pay taxes, even before affecting the taxable event. So all I want you to understand is that there are two instances. One is the basic tax point. The second one is the actual tax point. The actual tax point is decided by this time of supply, whether it is supply of goods or supply of services. Right, so this is the basic understanding that you should have. Now we will go what the provisions of the law actually says. So time of supply, again forward charge and reverse charge. In case of goods, it is the earliest of the following: the date of issuance of invoice by the supplier, or the last date by which he is required to issue an invoice. Generally, the rule of thumb is that in case you effect a supply, for the supply is affected, the invoice shall be raised within 30 days from the date of supply. So he has to issue it within 30 days. So as far as goods are concerned, see, generally, as I told you, three events will decide the time of supply. One is the receipt of advance, second is the issuance of invoice, third is the actual supply of goods or services. If out of these three events, whichever happens the earliest will decide the time of supply. But one concession has been extended as far as goods are concerned. The concession extended is that if you receive an advance, that will not be considered for the purpose of deciding the time of supply. Okay, so only for services, receipt of advance has been recognized as one of the elements which will decide the time of supply. So in case of goods, it shall be either the date of issuance of invoice or the date on which the goods are actually supplied. Okay, so among these two, whichever is the earliest will decide the time of supply with reference to goods. With reference to services, if you receive an advance, then that point when advance is received, even prior to issuance of invoice or provision of service, once advance is received, that will be the time of supply as far as services are concerned in the forward charge mechanism. As far as reverse charge mechanism is concerned, it is the time of receipt or the recognition that happens in the books of accounts. So for instance, you cannot decide, no, like when you receive services, you are not going to make any payment. But how will you, if you have created a liability towards yourself for receipt of services under reverse charge mechanism, the point or the time at which you have created a liability, you have made an accounting recognition, and that will be the time of supply for services as well as for goods, right? So this is as far as reverse charge mechanism are concerned. So I don't want to go much into the legislative aspects. Let me try to explain to you with some examples so that you understand it better. Mrs. X sold goods to Mrs. Y and issued invoices on 1st of January 2020. Mrs. X supplies the goods for delivery on 17th of February 2020. So what will be the time of supply here? Can anyone tell me? And okay, anyway, if I toggle between this, I think probably I'll give the answer also. But anyway, let me. Okay, so the answer is earlier of the following: the date of invoice is 1st January. The date of actual supply will be 17th of February. Because invoice has been raised on 1st of January, the time of supply will be 1st of January, and the GST liability shall be discharged to the invoice amount that was raised on 1st of January completely. So in case an advance has been received, because it is supply of goods, the date of receipt of advance will not be a criteria to decide the time of supply. Second example, X sold goods to Mrs. Y and issued invoice on 1st of January 2020. And Y collects the goods from the premises on 10th of February 2020. Here, what happens is the goods are delivered on 17th of February. Here, the goods are collected, right? So will this make any change in the time of supply? it will not change whether it is delivered to him or it is collected by the customer. The taxable event happens only when it is delivered or when it is collected. So the supply of goods happens only on that particular day. But before that, an invoice has been issued, and therefore the date on which the invoice has been issued will be the time of supply as far as the goods are concerned. Some more examples. Messrs. X sold goods. I have highlighted goods here to Messrs. Y and issued invoice on 1st of January. Messrs. Y made full payment on 20th December 2019. What will be the time of supply? The answer here is earlier the following would be the time of supply. Date of invoice is 1st of January. Date of payment is 20th of December. Because it is with reference to supply of goods, the receipt of advance on 20th of December will not come into play. It shall be only the date on which the invoice has been raised. But if instead of goods this has been services, then the time of supply will be 20th of December when the advance has been received. So this is a distinction that you will have to understand between goods and services. And payment by installments, right, fine. When you receive advance, that is the time of supply with reference to services. And let us assume that I am providing a service worth 10 lakh rupees, of which I am getting an advance of maybe 1 lakh rupees every month for the next 10 months. Okay, so GST liability will accrue to the extent of the installment payment whenever I receive that. Okay, so let us assume that there is a contractual obligation for me to provide a service for a period of 10 months, and the total contractual value is 10 lakh rupees, and the let us assume that it starts on 1st of January and ends on 31st of October. And as per the contractual obligation, every month I have to pay him an advance of 1 lakh rupees for provision of service. So every time that I make a payment, it is not that because the total contractual obligation is 10 lakh, I will be paying GST only on completion of the provision of service. Every time that I make 1 lakh rupees, to the extent of 1 lakh rupees, GST will have to be discharged because it is an advance received for having agreed to provide a service, and therefore GST will have to be paid for every installment that is received by the supplier. And then one more example, X issued invoice for services rendered to Y on 5th of November 2019. The provision of service was completed on 25th of October. So what is the time of supply? Right, the answer is 5th November will be the time of supply of services, as the invoice is issued within a time frame of 30 days. So you'll have to understand this concept will be spoken to you when somebody speaks to you about the invoicing provisions under GST. The main condition that has been imposed is after completion of the provision of service, within 30 days, the invoice will have to be issued. If the invoice is not issued, the time of supply will shift to the date on which the service is provided. So the general rule of thumb is that within 30 days of provision of service, invoice will have to be issued. For banking and financial services, it is 45 days. Let us not worry about that. But general rule of thumb is after provision of service, within 30 days, invoice will have to be issued. Otherwise, it will be treated as a non-compliance of the legislative obligation. So that is why this question is also here. So are you clear about this? Shall I go to the next one, or are there any questions? Could not understand, sir. If the advance is received, will we pay GST on the advance amount or full amount? No, the GST will be paid only to the extent of advance received, not on full amount. See, the example which I gave is, I have agreed to provide a service for 10 lakh rupees, for which I have received an advance of 1 lakh rupees. Only to the extent of advance received, I will be paying GST. For the balance 9 lakh rupees, I will have to pay GST either on completion of the provision of service or at the time of issuance of invoice, whichever is earlier. I will not wait till the amount of 9 lakhs is received, because GST is to be payable on accrual basis, not on receipt basis. Okay. Could not understand example 2. Yes, I think I have explained this installment once again. What is this example to? I will go and I will explain that in a minute. Yes, here Messrs. X sold goods to Messrs. Y and issued invoices on 1st of January. Y collects the goods. Okay. See, what happens is, see, there is always a confusion. There is always a confusion in the sense that, see, whether I have to deliver the goods at the customer's premises or whether he will come and collect from my premises. See, that is outside the ambit of GST legislation. See, the supply is recognized either at the factory gate where the goods are sold, whether by me or he comes and collects. Okay, it doesn't make any difference. So that distinction I wanted to make. So even if he collects later, I have completed all my obligation, but he comes and collects only on 10th of February. So that will decide about the actual provision of service. That is the basic tax point. But because I have already issued an invoice on 1st of January 2020, whether he collects subsequently or not, for the invoice amount, I will have to pay taxes, right? So this is the example 2. I want to distinguish between two aspects between first example and second example. First example speaks about my responsibility to deliver it at my customer's premises. The second example is same or similar, but I have no obligation to deliver it at my customer's premises. He will have to come and collect it from me. So that is the essential difference between these two. Otherwise, both are same or similar, and the liability accrues. The time of supply will be on the date on which the invoice has been raised. That is on 1st of January 2020. Whether the supply is made on 17th February or the customer comes and collects it on 10th of February, it doesn't make any difference as far as I am concerned. Is that clear, Mr. Shashwat? Yeah, fine, happy. Okay. So the next one may be a little bit more confusing in the sense that, see, in case there is change in the rate of tax. See, there has been a lot of changes in the GST legislation. So if there is change in the rate of tax, what rate I have to what rate I have to adopt. Okay, first of all, I'll try to give you this example here so that you will be able to understand it better. Let us assume that A has supplied goods to Mrs. B on 2nd January 2020. 2nd of January 2020, he has already supplied goods. The goods, in fact, attracted 18%. That was changed to 12% from 1st of January 2020. Okay, and A has issued invoice on 20th of December 2019, and payment has been credited to his bank account on 30th of December 2019. Right? So I have explained about all the 3 events which will decide the time of supply. One is the actual supply, that was on 2nd of January. The second one was the date on which he has received the payment as advance, that is 30th December. And the third one is 28th December on which he has raised an invoice. Can any one of you tell me which will be the time of supply here? Time of supply here? 3 dates are there. No, okay. Yes, yes, you're right. 18% is right. That is precisely, I wanted answer about time of supply. Okay, see, there are 3 events here. Yes, 28th December, correct. 28th December is the time of supply because it was on that day invoice was issued, and of the 3 events, the earliest one happened on 28th December, and time of supply is 28th December, and therefore the rate that was in existence at that particular point of time was 18%, even though the rate was reduced on the date on which the supply was affected, that was on 2nd of January. The rate to be adopted will be only 18%. Perfect. I think Shashwat and Sairam have understood this concept very clearly. So now I will go to the table here so that you will be able to appreciate how the scheme actually works. Okay. Right. You can see the table here. See, there are 3 events which triggers which will help you to decide whether you have to adopt the new rate or old rate. The rule of thumb is from among the 3 events, that is the date on which it is actually supplied, or the date of issuance of invoice, or the receipt of payment. see, the majority event where it happens will decide the time of supply, right? See, if two instances happens after the new rate, like here in the first situation, the goods were supplied before there is a change in the rate, whereas the invoice is issued and the receipt of payment happens after the new rate has been prescribed. So out of three, majority happens after the new rate has come into picture. So in that situation, it will be the new rate which will apply. So of the three, you just find out where the majority of event happens, whether it is before the change in the rate of tax or after the change in the rate of tax. So that will decide whether you will have to adopt the old rate or new rate. Because see, this explaining this, I think probably it will take a lot of time. It will also confuse. That's precisely why I took the example first, so that you are able to appreciate this concept. Okay. So I hope you have understood this rule of thumb here. Just try to find. Okay. Okay. I will explain this for the sake of clarity for Kritika. I will take the same example, okay, and then try to explain it to you again. See here, what happens, you just see here, there is a supply from A to B, and actual supply is on 2nd of January. So let us assume that I have entered into a contract to supply a machinery of 10 lakh rupees. So I am supplying it on 2nd of January. In the meantime, from 1st of January, the rate of tax has been reduced for the goods that I am supplying from 18% to 12%. On 1st of January, it has been reduced. When actually the goods were delivered, it was delivered only on 2nd of January. Does it mean that whether I should adopt 12% or 18%? I cannot jump into conclusion. I have to now see whether I have issued any invoice or received any payment prior to supply of goods. So the second sentence gives us information about that. I have issued an invoice on 28th of December 2019 that I will be making a supply of machinery according to the contract for 10 lakh rupees. I have issued an invoice on 28th of December. And on 30th of December, on receipt of invoice, probably my customer has deposited that 10 lakh rupees into my account on 30th of December here. Okay. So now we have all the three events which will decide the time of supply. One is the actual date of supply. Second is the actual date on which the invoice was issued. And third one is the date on which I have received the advance. Okay. So now here we will have to decide which is the time of supply here. Okay. The time of supply is the date on which I have issued an invoice, that is on 28th December. And what was the rate that was prevailing on that particular day? It is 18%. So even if the rate has been reduced from 18% to 12% on the date of actual event of supply, because the time of supply was on 28th December, which carried a rate of 18%, I will have to adopt is 18%. So this is precisely the rule of thumb that one will have to follow in case there is change in the rate of tax. This is as per the provisions of section 14 of the CGST Act. Okay, is this concept clear now? Okay, right. Explain the tax point again. See, the time of supply, you have two situations. One is the basic tax point and the actual tax point. Generally, the basic tax point is the point at which the event of supply actually happens. So that is the basic tax point. But because we have the term agreed to be provided, the actual tax point may not sync with the basic tax point. The other two aspects of raising an invoice or receipt of advance will also decide which will be the actual. Basic tax point may be different, but the liability will accrue if the issuance of invoice or receipt of advance precedes the event of supply. So that will become the actual tax point and not the date on which the supply actually happens. So that is exactly what I mean by the basic tax point, which is the time at which the actual event of supply happens, and the actual tax point is the time at which the invoice is raised or the advance is received. So it can proceed if it is earlier to the event of supply, it can proceed. That is why I have called it as an actual tax point. Is that clear now? Very good. Thank you. Okay. So place of supply. So what I will do is I will be running about 6 or 7 slides very fast here because I just want to put all the legislative aspects here, but each aspect will be explained with an example as I did for time of supply. So don't worry if I rush with reference to legislative aspects. I am not interested in verbatim explaining to you what are the legal provisions. I will explain each and every concept with an example as I did for time of supply. Okay. So when it is, see why this place of supply is very important. Probably I think you will all know that we have shifted from origin-based taxation to destination-based taxation. What does this place of supply actually mean? It is the place at which you have to understand where the supply terminates. Okay, so that will decide whether it is an intrastate transaction or interstate transaction. Okay, so let me again explain this with a small example. See, if you are supplying goods from Chennai to Coimbatore, okay, the origin of goods, supply of goods is Chennai, and the point where it terminates is Coimbatore. Okay, so the point where it terminates is the place of supply. So here, because the origination of goods is Chennai, termination of goods is in Coimbatore, both are in Tamil Nadu, it becomes intrastate transaction. CGST and SGST will have to be paid. Now let us assume a situation where I am supplying goods from Chennai to a person in Bangalore. Okay, here the goods terminates at in the hands of the consumer. The goods are consumed, you can say. I can also use that word. Services are also consumed, goods are also consumed. So the goods are consumed at Bangalore. So the place of supply is Bangalore. The place of origin is Chennai, Tamil Nadu. The place of supply is Bangalore, which is Karnataka. So here you can see that it is an interstate transaction from Tamil Nadu to Karnataka, and therefore IGST will have to be paid. So if you pay IGST instead of CGST and SGST, the liability is going to be the same. Okay, so if it is 28% for 1 lakh rupees, you will pay 28,000 as IGST or 14,000 as CGST and 14,000 as SGST. But the law wants you to assess the tax liability properly. If you pay IGST instead of CGST and SGST, it is not considered correct, even though it does not attract additional liability. But the manner in which the assessment has been done will not be tolerated by the legislation. So if you pay CGST and SGST instead of IGST, that also will not be tolerated. The provisions of Section 77 and Section 21 of the CGST and IGST Act are very clear that both are independent acts and they will not tolerate this sort of cross assessment. So clearly one will have to identify, apart from the calculations of liability, one will also have to estimate the exact tax that will have to be paid, whether CGST plus SGST or IGST, though the amount will not change. Right? Is that clear now? This is why place of supply is very important. So when the supply of goods, first of all, I am taking goods. When the supply involve movement of goods, the location of termination of movement, delivery to the recipient, that will be the place of supply. When it is not involving movement, like for instance, see, if you are installing a lift, so it is not involving movement, but it is the location where it is presented to the ultimate supplier. And supply involving installation and assembly, it is the location. Don't worry about it. I'm consciously going very fast. I will explain all these things. It's an illustration and example which will make you understand the concepts better. Supply involving installation or assembly, it is the location of the goods where it is installed or assembled. And delivered on behalf of a third person, this is something like bill to ship to transaction. It is when goods are delivered on behalf of the third person, it is the location of the principal person who ordered the goods that will decide the place of supply. I will explain that, don't worry. The principal place of business of the third person. And supply on board a convenience. You are traveling in an aircraft and you are provided with a service. So you will be crossing many states. From Chennai, you are going to Delhi and you are provided with a service on board. You don't know, you may be provided with service when you are crossing Nagpur, whether it is an interstate transaction or intrastate transaction, nobody knows. So there are provisions for that. I will be explaining that also. And finally, if nothing is defined, GST Council has been provided with provisions to prescribe the conditions for that in case of exception situations, and that has already been provided. I will explain that. This is with reference to goods. This is with reference to services. I hope you all know what is a B2B transaction. B2B transaction is business to business transaction, which involves from one company to another company. Okay, so when there is, or you can also say the transaction is between two registered persons under GST. So the supplier is also registered, the recipient is also registered, which means that the location of the supplier and the location of recipient is very well known, established, and therefore the place of supply shall always be the location of the recipient in case of services, because services are intangible. You cannot see. Goods movement you can see, whereas services you cannot see the movement. So it is has to be absorbed according to the recipient's recognition. So it is always the location of the recipient in case of B2B transaction. In case of B2C transaction, B2C transaction is from a registered person to an unregistered person. So in that situation, if the location of the recipient is known, then it is the place of supply will be the location of the recipient. If it is not known, then it is the location of the supplier himself, right? So for instance, if I am a chartered accountant from Chennai who is providing a service to a person who is in Bhopal, if I know the location of the recipient, it is in Bhopal, then it becomes interstate transaction. But if I don't know where the person is located, then the place of supply is the location of the supplier, me, and it becomes an intrastate transaction from Chennai to Chennai itself, right? So I will go to the examples straight away instead of wasting time. See, I hope you have understood the importance of place of supply. If you say yes, I will proceed further. Importance of place of supply. I will explain you various situations a little later. Have you understood the importance of place of supply? Why place of supply is very important? If somebody can confirm me, I will proceed. Otherwise, I will have to explain the concepts again. I want you to be a little quick in your reaction because we have only about another 30 minutes of time. Not that much clear. Okay, right. So probably I think the examples will make it very clear. See, the underlying principle is that we should know whether it is an interstate transaction or intrastate transaction. Okay, so that we will be in a position to decide what type of tax will have to be paid. Okay. Yeah, I'll come to that, Shashwat. I will come to that regarding booking of railway ticket. I have this as an example also. Don't worry about it. But at this particular point of time, I want you to understand and appreciate why place of supply is very important. The answer to that is place of supply is important to decide whether CGST plus SGST will have to be paid or IGST will have to be paid. So if that point is very clear, we will go to the examples. Okay. Right. So in situations where the supply involves movement of goods, it is the place where the goods terminates for delivery. So the example which I am going to give is from Chennai. A person in Chennai received a purchase order from a person in Hyderabad. Now the person in Chennai wants to supply the goods to the person in Hyderabad. The supply involves movement of goods from Chennai to Hyderabad. So the goods terminates for delivery at Hyderabad. Therefore, the place of supply here is Hyderabad, and it becomes an interstate transaction. Okay. Next. So you can, what I suggest is, because I'm not able to see the chat box, you can please note down the examples which I am giving here and then later ask your questions. I will be answering them clearly. Okay, because I'm not able to toggle because I have first given the questions. I will be pausing for about 10 to 15 seconds so that you can self-evaluate, and then I will give the answer for that so that it becomes easier for you to understand. Have you heard of this concept, bill to ship to transaction? Bill to ship to is that, let us assume that I am a person who is located in Hyderabad. Okay, so I have received a purchase order from a person who is residing in Vijayawada. Okay, so what happens is, I don't have such goods in Hyderabad to be supplied to him. but I have identified a supplier in Delhi who is capable of supplying it to him. Okay, what I will do, I will issue directions to a person in Delhi to supply goods directly to the person in Vijayawada, whereas send me the bill to me. Okay, it doesn't make any logistic sense for me in Hyderabad to receive the goods from Delhi to Hyderabad and then send it from Hyderabad to Vijayawada, because I'm not going to use it. It is the person who is in Vijayawada who is going to use it. So I can always order the person in my supplier in Delhi to directly deliver it to the person in Vijayawada. Okay, then what happens? The purchase order initially is placed by the person in Vijayawada to me in Hyderabad. I will be issuing a purchase order from Hyderabad to Delhi. So the Delhi person will raise an invoice to me and therefore transfer the right of ownership and possession to me from Delhi to Hyderabad, which will amount to supply, for which he will have to pay taxes as an IGST because it is from Delhi to Hyderabad. And then what I will do, I will separately issue an invoice from Hyderabad to the person in Vijayawada based on the purchase order that he has placed to me. And Hyderabad and Vijayawada again are in two different states, Telangana and Andhra Pradesh, and therefore this also will become a IGST. So in bill to ship to transactions, what will happen is there will be two purchase orders. One will be from Vijayawada to Hyderabad, and then one will be from Hyderabad to Delhi. And again, there will be two invoices and two supplies. One will be from Delhi to Hyderabad, and then the other one is from Hyderabad to Delhi, whereas the goods will be directly moved from Delhi to Vijayawada through an e-way bill or a delivery challan. So there are two IGST transactions here, and two types of assessments will have to be undertaken. So this is bill to ship to transaction. In this situation, what will be the place of supply? Right. So this is the situation that I have already explained. What will be the place of supply? This is exactly what I said. Okay. Here in this situation, the place of supply of goods will be Hyderabad. As far as Delhi person is concerned, though he is delivering the goods to Vijayawada, it is only the physical movement of goods, whereas the right of ownership and possession by the Delhi person is transferred to the person in Hyderabad. So it will be an IGST transaction between Delhi and Hyderabad. And then second IGST transaction will be there between Hyderabad and Vijayawada. So this is how it will have to be done. And the place of supply will be accordingly. As far as Delhi person is concerned, though the goods are actually delivered and it is terminating at Vijayawada, as far as Delhi person is concerned, his place of supply will be Hyderabad. And as far as Hyderabad person is concerned, the place of supply will be Vijayawada. So have you understood this concept? If not, please note it down. Third is assembled at site. See, whenever goods are assembled at site, it is the place of installation or assembly. Again, I'll give you an example. Mrs. D, located in New Delhi, places an order on Mrs. X of New Delhi. So the supplier is in New Delhi. The recipient of order is also in New Delhi. Okay. So what he wants, the person D wants to install an air conditioning machinery to his factory located in Chennai. So the supplier is in the supplier X is in Delhi. The recipient of supply D is also in Delhi, but his factory is in Chennai, where he wants to install a air conditioning machinery. So the D procures all the units that are required, and the machine is ultimately assembled by X in Chennai. Okay, so here the supplier is in Delhi, the recipient is also in Delhi, but the services are rendered in Chennai by way of installation. So according to the condition, if it is with reference to installation of plant or machinery, it is the location where it is installed which will decide the place of supply. So here the place of supply is actually Chennai. So you have to understand here that the recipient and the supplier are registered and located only in Delhi. Okay, but when X raises an invoice for having provided the service on D, the invoice will be an interstate transaction because it is with reference to a machinery installed in Chennai, though both are located in the same place. Okay. Next, on board a conveyance or vehicle. So again, I will take it with an example. Mrs. M of Chennai supplied goods to Indian Airlines of Chennai. So M is the supplier of goods, recipient is Indian Airlines, which is the recipient of goods. Both are located in Chennai, and this Indian Airlines is making a flight between Rajasthan and Mumbai, which is not in Tamil Nadu, which is outside the jurisdiction of Tamil Nadu. The flight is between Rajasthan and Chennai. The goods are loaded in the aircraft in Rajasthan before they start the journey. Okay. So according to this condition, the location at which the goods are taken on board. So the goods are supplied by the person in Chennai to Indian Airlines before the flight actually starts, and it is taken on board at Rajasthan. Okay, so the place of supply shall be Rajasthan. So here also both M is located in Chennai as well as Indian Airlines office is registered in Chennai. So generally we will carry your opinion that it is an intrastate transaction because both the supplier and the recipient of service are in the same state. But this is an exception situation. So whenever the goods are supplied on board a conveyance, it is the location at which they are taken on board which will decide the place of supply. In this situation, it is Rajasthan, and therefore the person located in Chennai will raise an invoice on Indian Airlines, who is also located in Chennai, but that will be treated as an IGST transaction because the place of supply is Rajasthan. For the person in Chennai, Rajasthan transaction will be a interstate transaction, and IGST will have to be paid. As far as imports and exports are concerned, import into India, it is the location of the importer. So if I am in Chennai and import from any place across the world, then IGST will have to be paid. You know that imports IGST will have to be paid because it is a deemed interstate transaction, and as a recipient of that goods, I am liable for payment of tax under reverse charge mechanism, and my location will be decided and IGST will have to be paid. Export from India, it is always going out of India, the place of supply is outside India. And directly in relation to any services provided directly in relation to immovable properties, it is just like this plant or installation of plant or machinery. It is the location of the immovable property. So let us assume that Izzard, who is located in Mumbai, engage the services of Mrs. Y, an architect who is also in Mumbai. Izzard requests him to make a design of commercial complex to be constructed in Chennai. So Izzard and Y are located in Mumbai, but Y, who is an architect, is going to provide a supply of services of interior decoration to Izzard for a property constructed in Chennai. Okay, so because the services are in relation to an immovable property, the location of the immovable property will decide the place of supply. So because Chennai is within India, it is the location of the immovable property. The place of supply is Tamil Nadu. But if the property, see for instance, instead of Chennai, Izzard has engaged the services of Y, the architect, and he wants to make an interior design to his hotel in Dubai, which is outside the taxable territory. If that be the case, then it is the location of the recipient. The recipient is located in Mumbai, therefore it becomes an intrastate transaction. But here, because the immovable property is located within India, it is the location of the property, Tamil Nadu. So you have to understand and distinguish between the location of the property inside India and outside India. If it is inside India, it is the location of the property. If the property is outside India, it is the location of the recipient. Okay, so that will also have to be understood. Same is the condition with reference to accommodation services provided to immovable property. Mr. B staying in Dubai, trained for the purpose of grooming horses in Chennai. The place of supply obviously will be Chennai, even though the person is staying in Dubai. And way of lodging and accommodation services, again, the condition is same. The location of the immovable property. If it is in India, it is the location of the immovable property. If it is outside India, it is the location of the recipient. Example here is Mrs. R, registered in Jodhpur, went to Calcutta and stays in Taj Hotel in Calcutta. He is also availed beauty treatment services in that hotel. So here the location is, place of supply is the location of the property which is in Calcutta, though R is registered in Jodhpur. I know I'm going very fast, but I'm taking this advantage only because of the fact that I'm explaining this with an illustration. Okay, so let us not worry about the subsections of section. Precisely why I will explain to you. You need not verbatim remember what the section actually says. You will have to remember only the concepts. Once the concepts are known, I will tell you a secret method by which you can remember the sections or the provisions where these are available. Okay, so the the place of supply with reference to training and performance appraisal services. Success Academy registered person provides a commercial training and coaching for budding CMAs in Chennai. Many students across various states come to Chennai and stay in Chennai for the purpose of undergoing training in Success Academy. What is the place of service? So if it is an unregistered person, it is the place of supply is the location of this the academy. But if he's because an unregistered person, if it is a registered person, it is the location of the recipient. Okay, here in this example, it is the location where the service actually performed. The training is actually provided in Chennai, and therefore, for all unregistered person, it is the location of the place where the training actually happens that will decide the place of supply. It holds good for cultural events also. See, IPL has started yesterday, so I thought I will take this example of IPL. The BCCI, located in Mumbai, sold tickets online for an IPL match. It's going to be conducted in Chepauk Stadium in Chennai. Okay, so finally the match is conducted in Mumbai. Initially, it was scheduled to be held in Chennai. However, due to exigency, it was shifted from Chennai to Mumbai. The ticket actually were sold only for the event to be held in Chennai. Finally, the event actually happened only in Mumbai. So what is the place of supply for the admission of the sporting event? It is the location where the event actually happened, that is in Mumbai. Though the tickets were sold for Chennai match, because the event happened only in Mumbai, and also because BCCI is located in Mumbai, it becomes an intra-state transaction, even though initially it was issued for Chennai match. Okay, but if the matches were actually held in Chennai, it becomes an interstate transaction. Right. The next example is hosting an event. Mr. X at Chennai is a comedian who has hosted a comedy show in Singapore, outside India, on the birth occasion of a Mumbai-based actor's son. Okay, so here the place of supply will be the location of the recipient of service, because he is outside India, and the recipient of service is the Mumbai-based actor, and the place of service is Mumbai. So it becomes an interstate transaction. Services by way of transportation of goods, including by mail and courier. It is generally the location of the recipient of service, but if it is an unregistered person, it is the place where it is handed over. Again, the example will help you to understand it better. ABT, a transporter, is registered under GST, located in Vizag. So the transporter is located in Vizag. Mrs. C Limited of Chennai is registered under GST. So it's a registered person. Receive the services of APT for transport of goods from its warehouse in Vizag to Guntur. So the goods are received at Vizag, and they are to be transported from Vizag to Guntur. The APT delivered goods at Guntur. So what is the place of supply here? Little bit confusing, but once you read these examples clear, along with the contents of the table that are provided here, you will be able to understand and appreciate it better. The recipient is a registered person. The place of supply is Chennai, because he is the recipient of service and his address is known. So it is Chennai. The recipient is not registered. It is the place at which the goods are handed over, that is Vizag. The Vizag ABT Transport has handed over the goods at Vizag, and therefore it is the place of supply is Vizag. Passenger transportation service. Again, this question was asked by one of the participants. Let us try to understand this. Jet Air service, Jet Air, registered under GST and located in Mumbai, operates a flight between Chennai, Dubai, London, Dubai, Chennai. So it is a circuitous route: Chennai, Dubai, London, Dubai, Chennai. So this is how it is organized. PQR, who is unregistered person, purchased an air ticket for Chennai, London. 2 tickets are issued to him from Chennai to Dubai, and then halt, and then Dubai to London. What is the place of supply? Place of supply, if it is a registered person, it is the location of the recipient of service. If it is an unregistered person, it is the place where the passenger embarks on continuous journey, where he takes the flight. So here, I've told that Jet Airways is registered, whereas PQR is an unregistered person, which means that it is the place at which he actually embarks on this continuous journey, and therefore the place of supply is Chennai. If PQR is a registered person and his location is in Mumbai, registered in Mumbai, then the location is the recipient of service. So I think I have answered the question which was asked. Anyway, if you want, I will come to that back again. Here, a movie on demand is provided on board and entertainment during Delhi-Chennai leg of London-Delhi-Chennai flight. Okay, see what happens here is that there is a flight from London to Chennai and a passenger has been provided with in-flight services for the leg between Delhi to Chennai. Right, he has not boarded in London. He has been provided with the services from Delhi to Chennai. So in this situation, the place of supply will be London, which is the first scheduled point of departure of the conveyance, right? Even though the services are provided between Chennai to Delhi to Chennai, because the first scheduled point of departure is London, it becomes non-taxable. Okay, because the place of supply is London. Banking, again, if the location of the recipient is known, then it is the address of the recipient will be the place of supply. Otherwise, it is the place of the supplier, location of the supplier, which will decide the place of supply. Mr. Suresh, being a registered stockbroker at BSE located in Mumbai, he has clients in Chennai, Calcutta, and Bangalore. He has sells shares to his clients in Chennai, Calcutta, and Bangalore. The place of supply will be all places, Chennai, Calcutta, and Bangalore, right? And as far as insurance services are concerned, the same as banking services. The rule of thumb here is if the location of the recipient is known and is available in the books of records, the place of supply will be the location of the recipient. If it is not known, then it becomes the location of the supplier of service. This is the rule of thumb that we can adopt for any category of supplier of services. This OIDAR service, it is always the location of the recipient of service. OIDAR is something which is happening online, like you purchase e-books online or you purchase anything online. So you are or any training sessions are conducted through online. So this is called an OIDAR service, online information data based access and retrieval services. In such situations, generally it is the location of the recipient of service. If the location of the recipient of service is not known, it is the location of the supplier of service. If the supplier of service is not in India, then he has to appoint a person in India to represent him and then discharge the tax liability. Just have an understanding. I know it is not possible for you to understand everything which I gave you today, but just go through these slides once you are free, so that you will be able to recollect what we had discussed today. So in a nutshell, if it is the performance-based service, location of the performance. If it is an immobile property, location of the immobile property. Service relating to events where the events are actually held. And then anything other than this, when the recipient's location is known, then the place of supply is the location of the recipient. If it is not known, then it is the location of the supplier. The examples also we saw. Then for OIDAR service, it is always the location of the recipient of service. If the recipient of service location is not known, again, it's the location of the supplier. If the supplier is not in India, but outside India, it is his liability. And if he is not able to discharge, or if he does not have an office in India, he has to appoint a representative in India to discharge the liability. So this is essentially about the place of supply. I know I have taken only 30 minutes as far as place of supply is concerned. It requires a much more time, but still I thought I can give you a small snapshot so that you will be able to understand and comprehend the provisions in a better way. That is why I have taken the examples and illustration route rather than explaining you the provisions of the legislation. Okay, this GST practitioners, this, as I already told you initially, see, any student of commerce or law or banking can become a GST practitioner. See, you have three very important routes to go. One is either you can appear for civil services, which in fact should in fact be your goal, or you can take a professional occupation like a CMA or a CA or a CS also. Or if you want to water down little, you can go take the route of a GST practitioner. You can in fact take this as a profession. The legislation in fact recognizes it as a profession of this graduates in commerce, law, and banking. You can, on behalf of your client, help them to apply for registration, make tax payments on his behalf, file returns, and then apply for refunds. Appear. You can also appear on behalf of your clients and defend his case. You can generate e-way bill. You can guide and update your clients. So this is again almost equivalent to a chartered accountant, but only with reference to GST. So GST practitioner. Yes, in fact, it gives a wonderful career opportunity because the law is very new and that most of them are ignorant about the law. I think if you have a very good grip on this GST legislation, I think you have a very, very wonderful career. Right. Where to go? Where to seek for authentic information. I will give you that. This is what I wanted to show you. This is the GST Common Portal. So gst.gov.in. This will be the home page from where you can go. You have to create a user login as a GST practitioner, register with the department, take a examination conducted by the department, then become a certified GST practitioner, and then you can go and help your claims. And where the information is available, you can in fact download a GST mobile app called a GST Rate Finder. So it occupies in fact very, very less space compared to WhatsApp, Twitter, or Facebook, or any other app that you have downloaded. So it occupies very less space. This in fact gives you all the information about the GST law, the awareness that is required for GST, the rates of various supplies, FAQs for various topics. It also has information about the rates of goods, rates of services. You put a particular commodity. For instance, if you want to know what is the rate of tax for toothpaste, you have to just go there and then type toothpaste. It will give you the rate that is applicable for toothpaste. So this is a very, very wonderful mobile app that has been developed by the department. In fact, honestly, let me also be very candid on this aspect. I don't browse through the books to know what is the rate of a particular commodity, goods or services. I take the assistance of this app. So whenever somebody asks me, sir, what is the rate of tax for air conditioner? I will not go in search of the book. I will always put air conditioners in this GST mobile app and then find out the rate has been 28% or 18% according to the dates, right? So this is a very important mobile app. It comes very handy. So those who are having smartphones, you can use this mobile app and start using. If you don't have a smartphone, very likely for nowadays, you can always use this as an excuse or reason to your parents and then buy a latest mobile phone. I think that will also help you. And this is the official website of the GST department, cbic.gov.in, where you can have all the information. You have this thing called this GST tab here. You can go to this tab. You have a wealth of information about GST. You have all the notifications, all the acts, rules, and also circulars that are issued from time to time by CBIC with reference to GST. We also have a lot of information about the overview concepts. You have the advantages of GST, FAQs on various subjects. So place of supply, you have about 50 FAQs you can read. Sectorial FAQs, banking sector, construction sector, automobile sector, health sector, education sector. So sector-wise FAQs are there. You also have the YouTube link also for various concepts. We also have something called weekly updates. Every week we provide with the updates information that has happened for that week, so you can go and see every week what is the change that has happened as far as this GST changes are concerned. So this is a very, very useful website. My suggestion is that please don't buy any books for GST. This, if you are very confident in browsing through this website, I think that is enough for you to do an extensive research, because I know how much effort that is being put in updating this website. We have been contributing a lot of research material as far as this contents of this page are concerned. So don't buy any books, in the sense that even if you buy it today, maybe in another 1 or 2 months it becomes obsolete, right? Because a lot of changes are happening day in, day out. So always try to have a track of this website. This will be very, very useful. So you can always rely on this site for authentic information. So success of GST for business industry, improve community of tax structures, is remove the cascading effect of tax on taxes, improve the competitiveness, and so it's an absolute gain for manufacturers as well as for exporters. A lot of export incentive schemes that has been offered by the government. And for central and state governments, it has brought in a better administrative convenience, easy and simpler to administer. We have better control on leakage, and therefore a high revenue efficiency has been achieved. For consumers, single and transparent tax proportionate to the value of the goods and services. Now we know what is the value, we know what is the rate, and what is going to be our liability. It is not only for a particular state, it has been harmonized across all states. Whatever be the transaction with reference to any goods or services, wherever it happens, from Leh to Kanyakumari or from Gujarat to Meghalaya, wherever it happens, it is going to be common. So that's precisely what is called one nation, one tax. And it is also expected to bring down a lot of relief and overall tax burden for all the consumers. As I initially said yesterday, the research actually helps us to understand that there is going to be a reduction from 25 to 30% on the cost of supply, both for goods as well as services. It may not have an immediate effect, but definitely over a period of time, once the law stabilizes, I think we can expect as consumers this relief to percolate and reach us. So in conclusion, I don't want to tell everything here. GST is not a simple name-changing tax. It is in fact a game-changing tax, right? It is in fact a very a big reform. There has been a paradigm shift from what we had earlier and what we are having now. So it is not a simple name-changing tax. It is a game-changing tax. It has paved way for one nation, one market, and one tax. And we have started enjoying the benefits of that. And in fact, I don't know how many of you would have heard the words of our Honorable Prime Minister. He had not said that goods and GST actually stands for good simple tax. And I think, in my opinion, I think it is a great step towards transformation. And once we start enjoying the benefits of GST, probably we will also try to start appreciating its success. So with this, I will end my session here. I will stop sharing my PowerPoint presentation here and take questions from you, right? So how to determine the place of supply in case of booking of railway ticket? As I told you, it is the point of embarkment. See, in case you are embarking on a journey, let us assume that the train starts from Chennai and it goes to Delhi, and you are embarking at Nagpur. Then the place of supply is Nagpur. When you are booking a ticket through IRCTC, the headquarters of IRCTC is in Mumbai, right? You are embarking on a journey from Nagpur, and therefore the place of supply will be Nagpur and IGST will be charged, right? So, and in case while booking you are not giving your registered place of supply, then the situation will be from where you are embarking on the journey. In case you are providing your GSTIN number, which will show you that you have a registered place of business, even if you are embarking from Nagpur, you are saying that I am registered in Mumbai, it becomes an intrastate transaction. This is how it will have to be understood, right? Are there any questions for me to take?
Sir, I have a question, sir.
Yeah, please.
GST practitioners,
Yeah.
there is one exam conducted by the nation for approval of the GST practitioners.
Correct,
For whom it is applicable, sir, the exams?
Yeah, see, at present, what happened was, see, we are into third year of, we have completed 3 years of GST.
Yes, sir.
So all these exams initially we conducted only for those people who are already in practice. Like you all have somebody called registered service tax
Sales tax practitioners.
service tax practitioners, also income tax practitioners, sales tax practitioners.
Yes.
There is a legislative compulsion for them to, in fact, qualify before December 2019. So we had to rush and then conduct the exams for them initially so that they become eligible to practice as GST practitioners, right? So that was the scheme that was there earlier. But all exams that are likely to be conducted from now on will be for everybody, including those who are commerce, banking, and law graduates. They can also take the examination. So absolutely, there will not be any restriction after this.
Yeah. Thank you, sir.
Right.
Students, any questions? Okay. Thank you so much, sir, for spending your valuable time. Today, your elaborate discussion and practical examples, especially with regard to, with regard to the discounts in the invoice and the other place of supply examples was, it was mind-blogging. So you have given a lot of inputs for the students to go back and refresh, come back with the doubts. Thank you so much for being with us, sir. On behalf of the Department of Commerce, DG Vaishnav College and the Institute of Cost Accountants of India, I take this opportunity to thank our Srivatsan sir, in spite of his busy schedule, even on Saturday and Sunday. For them, there is no Saturday and Sunday. So in spite of their busy schedule, you have been with us for our students and for the development of the institution. Thank you so much, sir.
Yeah, thank you. It was a pleasure for me also. Thank you very much, sir.